All right, we begin here in Nigeria. Central Bank, of course, raising its monetary policy rate by 25 basis points to 27.5%. The asymmetric corridor was unchanged, plus 500 minus 100 around that MPR. The cash reserve ratio for the deposit money banks unchanged at 50%. For the merchant banks at 16%, also unchanged. And the liquidity ratio also unchanged as well. So pretty much only the MPR was what was moved. Let's listen to the governor of the Central Bank of Nigeria, Omoyeni.
The committee was unanimous in its decision to further tighten policy and thus decided as follows. 1, raise the MPR by 25 basis points to 27.50% from 27.25%. 2, retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3, retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. 4, retain the liquidity ratio at 30%.
All right, let's get into our discussion. I've got two great guests with me. First off, Felicia Awolope, who is an investment research analyst at Meristem Securities Limited, and Ibukun Omoyeni, Sub-Saharan Africa Economist with Vetiva Capital Management. Lady and gentlemen, thank you both for joining us today. Really appreciate you making the time to talk to us 4 o'clock in the afternoon. So first off, Felicia, let me start with you. Same question for the both of you. I want to get your reactions. Was this rate hike in your forecast? What do you make of the decision?
Thank you very much for the question. So pretty much, I think the consensus was that the markets analysts expected a rate hike. Looking at inflationary pressure still existent, inflation for October increased from 32.7% to 33.88%, and it just goes in line to expect a rate hike. However, the consensus was to expect like a 50 basis point hike, taking a look at the fact that, even when inflation declined in, July, August, September, the MPC decided to still hike rate by 50 basis points. So, now that you see that inflation has resumed this uptrend, it was just expected that people will be seeing the MPC hike rate by around 50 basis points in its meeting. But of course, we saw them do a 25 basis point hike in the MPR, and it was in line with expectation, but less than expected. That's what I'll say.
Thank you. Ibukun, how did you see it?
I think it was still well in line with expectations. We had expected a 25 bips to 50 bips hike. And the reason for that is because we've seen inflation moderate. That's prior to now. The recent acceleration in inflation is due to the sizable PMS price increase we saw in September. 24% month on month. That's the largest we've seen since the removal of subsidy in June 2023. And it made sense that the CBN would continue to hike, but at this point, we felt a much milder hike may suffice at this point, and that's why we expected that the 25 to 50 bips hike is well in line with expectations. Okay.
I want to ask you both, this is my favorite chart in the world. We're going to update this chart and actually put pictures of each of the CBN governors. But when you look at the MPR, versus CPI, and that is the trajectory. Well, hopefully we're going to get that chart. There it is, yes. So as Felicia was talking about, you saw the deceleration, but then climbing, that's the yellow is the CPI, headline inflation, and then the blue line is MPR. So there's still a gap between the two. So to the both of you, to everyone who continues to say that, is monetary policy enough to fight inflation? I just want to get your holistic view on the quest to get those two lines. In fact, to actually get the blue line, I guess, maybe to be higher than the yellow line, or to get the yellow line down. What do you both make of the quest to bring inflation down, Felicia?
If you look at the nature of Nigerians' inflation, right? If you look at the underlying drivers of inflation, I would say a lot of the drivers, or the majority of the drivers, has to do with fiscal policies and fiscal needs, really, rather than, what monetary policy actions can tame. You look at the fact that the food index, which contributes like 50% to inflation, is one major thing that has been fueling headline inflation figures. And if you trace what is, causing this uptrend in food inflation, you see, ongoing legacy issues that we have in the country's food sector, insecurity in food producing areas, transportation costs growing higher due to bad roads, due to increase in fuel prices, and even the naira that keeps depreciating is one thing that is, increasing the cost of import-dependent items. And so there is a limit to how the MPR can actually target these things. Of course, there's a fact or the part where the Monetary Policy Committee is trying to target, exchange rate management to make sure that if we see stability in exchange rates, maybe, the price of imported items will stabilize, and that could also lead to moderation in inflation figures. But basically, the major drivers, the underlying drivers of inflationary pressures needs to be addressed by the fiscal policy.
So you agree, putting all this on fiscal policy. The governor was saying during his press conference that, was talking about our love for imported goods. So how do you see that fight against inflation in Nigeria?
Okay, so I think Nigeria over the years has practiced unorthodox monetary policy, and in a bid to bring Nigeria back to that path, you are going to see more rate hikes. And I know that there's this worry around why are we hiking interest rates despite the fact that inflation is not falling. But when you look at it, monetary policy has a lag effect, right? Once you hike in Q1, for instance, might be a lag of 2 to 3 quarters before you begin to see that take shape. And when you look at the fact that, just like the CBN governor said, we in-house in Vetiva, we estimate that inflation might fall in Q1 2025. And that's because, of course, the recent PMS hike, by then we expect it to wear out. And we record that Q1 this year, we saw pressure from food-producing regions whereby food was taken out of states into neighboring countries, right? If that risk does not happen again next year, there's a very high likelihood that inflation might decelerate in Q1. And secondly, to the effectiveness of MPR, without the MPR hikes we have seen this year, we think the Naira would not have been stable, would not have seen foreign portfolio inflows. Year to date, we've seen close to $4 billion in foreign portfolio inflows, and that's a result of the sizable rate hikes. And we've also seen that anytime the Naira weakens to around the 1,008 levels, we see that because of the policies of the CBN, a lot of foreign portfolio investors are encouraged to come in. Since October, we've recorded at least $1 billion in foreign portfolio inflows on a monthly basis. And we think that high MPR is needed to keep the demand for the Naira positive and to ensure that the Naira remains stable.
Now, the next question, of course, we have to, ask about the individuals and businesses. I don't know whether you two want to split it. One person talks about individuals, one talks about business, so you can both talk about both. But what's the, impact with borrowing costs, and how do you hedge against this if you're an individual or a business where borrowing costs are rising? Felicia, I'll start with you.
I mean, if you look at what the MPC did in the monetary policy meeting, the outcome of the monetary policy meeting today, I would say the impact on borrowing cost would, of course, mean that for a lot of banks, credit organizations, there'll be repricing of their loan, their loan basket, and it could mean higher borrowing costs. But if you compare the pace of increase to what we've previously seen, I would say, especially with the fact that market priced in, 50 basis points, like a much more higher hiking rate, I would say that, yes, there will be the impact of higher borrowing costs, of course, but, compared to what we've seen this year, I mean, we've seen 850 basis points before this year. I would say, so the impacts would be more milder than, for previous outcomes. And what it means is that, businesses, of course, a lot of businesses are trying to hedge against this. We're seeing businesses trying to pay down some of their loans just to make sure that the burden of higher borrowing cost is a bit reduced. And especially businesses that, have exposure to exchange rate loans, foreign exchange denominated loans, foreign currency denominated loans. We've seen them trying to pay down some of this, portion of the loans, or substantial portion of these loans, to just make sure that they're a bit hedged against the burden of higher borrowing costs whenever the Naira depreciates or whenever we see increase in interest rates.
All right, Ibukun, how are you seeing it for the man and woman on the streets and the average SME out there?
Yeah, for the average SME, this actually means higher borrowing costs. And what it also means is that for individuals with flexible loans, loans that have a floating option, they will see higher repayments. And also looking at the fact that the higher borrowing cost actually has two sides, right? Higher borrowing cost also helps to prevent increased credit such that there's limited room for FX speculation. On the other hand, the higher borrowing cost would also help to conserve FX in that sense. And if there's some sort of stability or appreciation from that policy, you will still see that trickle down to the average man on the street.
Now, despite, I want to get you, because of course we got GDP figures just yesterday, Q3, for Nigeria. Despite this high inflation that we've seen, we still saw the economy grow 3.46% year on year. Okay, so those are the figures. I'll dwell on GDP for a minute here. Q2, 3.19. Q3 of last year was 2.54, and then full year 2023 was 2.74. So I do want to get both of you your thoughts on what we've seen in terms of the GDP growth for the third quarter of the year, and I guess maybe we'll get into some of the sectors, or just basically your thoughts. Felicia, starting here, what did you make of the numbers we saw from the MBS?
I mean, the growth numbers that the MBS reported yesterday was in line with expectation. I mean, we at Meristem, we expected growth to, hover around 3% for Q3. And that's on the back of the fact that we expected improvements in the oil sector. We've seen, some modest, I would say modest, but we've seen modest gains in the output from oil sector this year. And, we've seen different government initiatives trying to improve production and all that. And it has, trickled or translated into higher outputs, especially when you relate it to corresponding period of last year. And of course, we also know that some sectors, also some sectors of the non-oil sector have continued to, exhibit strong performance. We've seen the financial services sector, recording growth of over 30%, because like you've mentioned, there are a lot of things, there are a lot of activities going on in the financial services sector to improve output. There's a recapitalization, there's the fact that there is the chance for higher growth, and there's the chance for expansion opportunities, in these sectors, due to the fact that they seem to be able to benefit from the ongoing, situation in the country's macroeconomic space. So of course, the figures are not, so far from what was expected. And I would say that, of course, some sectors continue to be challenged by ongoing macroeconomic conditions. We've seen manufacturing sector continue to display, modest growth. And of course, if you are seeing higher borrowing costs, if you are seeing the depreciation of the exchange rate, those are things that will continue to weigh on expansion in, real sectors. And of course, we expect that might even continue in the near term, while sectors like the financial services sector, continue to, exhibit strong performance, and that might continue to carry good figures for the country.
Ibukun, how do you see the economic growth for the country?
So the economic growth numbers were quite surprising, because we saw transport recover. We recall that since Q2 2023, we've seen negative growth numbers for the transport sector, but we saw about a 12% recovery in the transport sector, and that took growth to above 3%. Ordinarily, due to the recovery in the oil sector, due to the low base from last year, about 1.2 million barrels and around 1.4 this year. So that the oil sector was quite there to actually boost growth numbers, but transport sector recovery was quite surprising. When you look at the breakdown of PMI numbers from the CBN, we actually, in-house at Vetiva, we requested the sectoral breakdown of data. And when we saw the data, we found out that PMI data suggests that there was some contraction in the transport sector, but the NBS numbers is saying that there was an expansion. So there's a bit of a contradiction there. Nevertheless, we believe that if this rebound in the transport sector continues into Q4, we could see very much stronger Q4 numbers, and especially because we began oil refining in commercial quantity in around September. This will significantly impact oil refining. If you check the Q3 numbers, we still saw oil refining decline about 30% year on year. We are also looking at how this will impact refining numbers in Q4, because the throughput for 2023 was around 7,000 barrels per day, and if we are doing about 300,000 barrels per day in oil refining, we should see significant boost to oil refining, and that would drive output above 3%, obviously in Q4. And overall, we expect that growth might hover around 3.3% in 2024.
Okay, let's touch on oil production now, because we have a correspondent, I think, in River State, in Port Harcourt. There's news that apparently the Port Harcourt refinery is at some point going to start production, if it hasn't already. So we'll have to see where those numbers get factored in. But so 1.47, we've highlighted where the administration came in, was 1.22. There's also the issue of condensates and so on and so forth. Considering the need to defend the currency, FX inflows and so on and so forth, what do you both make of the I guess, the quest to get us back to 2 million barrels per day and maybe even more with respect to how important oil is to the economy. Felicia, what do you make of the quest there?
Well, I would say, the government has disclosed, or their posts or their actions have shown intention to actually ramp up oil productions. I've seen some actions to back that up. We've seen them trying to increase securities around oil infrastructure to reduce oil vandalism, and then we've seen the federal government also try to attract investment into the oil sector, giving tax incentives. We've seen them, auction of oil blocks and oil rigs, which is something that when operations start in these oil blocks and oil rigs, it could also contribute to improved outputs for the country. But one thing for Nigeria would be that there are a lot of policies that are enacted. When do we see, the actual yield of these policies would be what we are looking forward to? Yes, we've seen different actions from the federal government. We've even seen indigenous companies in the oil sector take up, new properties. And when production, of course, begins at all these assets, both offshore and onshore assets, it could mean that Nigeria as a country will be seeing higher production figures. But one major thing that still needs is that we need to see a follow-through from where the government signs some policies, some policies into laws, and when we begin to see effects, there's I wouldn't say problem, but there's the issue of correct and effective implementation of policies that needs to be taken care of so that all these efforts begin to bear fruits and it will begin to impact oil figures. And if that happens, like you mentioned, it would mean improved oil receipts for the country, which would increase our ability to defend the naira and might even stabilize the country's the exchange rates, really.
Ibukun, what's your take on what we've seen with the oil production?
Looking at the moves to increase oil production, I think they are well in the right place, given the fact that we have if you look at Nigeria currently, our refining capacity, except the Dangote refinery, is around 445,000 barrels per day. If you add Dangote refinery, you're going to be doing about 1 million barrels per day, right? And there's a clause in OPEC rules that crude production for local refining is not subject to OPEC quota. That means that we can scale beyond 2 million barrels. We can actually do 3 to 4 million barrels. 3 million barrels, for instance, if we can locally produce and locally refine 1 million barrels and export the remaining 2 million barrels. So I think refining actually opens the door for much more investments in the oil sector, and with the right incentives, a lot of countries around the world today are discovering oil fields, and due to the difference in probably the laws and regulations, you see investors going to the most attractive places. So I think government needs to look into its regulations to ensure there are attractive clauses that would attract foreign direct investments over the near term. And I believe when that happens, the increase in oil production will actually boost both our local refining and also our exchange rates. Okay,
I just want to follow up. We were in Baku for the COP29. I want to get both your thoughts. The fossil fuel versus renewable energy dynamic, amidst all this investments in oil and so on and so forth, how do you think that fits in to the wider renewable energy discussion? Can we walk that fine line while we know that we need our economy to be supported by oil while the rest of the world is trying to boost solar, wind, and so on and so forth? How do you guys see that line?
I mean, for us in Nigeria, rather, I would say we're a blessed country. Yes, currently we are dependent on oil for the, significant bulk of our revenue. But Nigeria has significant gas reserves too, which gives us the ability to actually harness this gas to be able to, move in line with, where the world is going with renewable energy and, trying to, limit the usage or consumption of fossil fuels. So yes, of course, currently, I don't expect that the move to renewable energy is going to happen next year. I mean, all over, if you take an holistic view, I don't think it's going to happen next year. I don't see it happening, maybe in the near term, really. It's still going to take a lot of things have to be put in place. You will still see a lot of gadgets, a lot of upgrades that has to come into place before the world can, finally move, maybe completely from fossil fuel consumption to consuming renewable energy as a whole. But I would say for Nigeria, the need or the next thing to do will be to harness what we already have. We have significant gas reserves. So it is just for people who have made investment into the oil to just try to make sure. And if you see some of these players in the oil and gas sector, some of them are already trying to do that, to branch out into the gas part of the oil and gas sector. That is why it is oil and gas. And then to make sure that they have a stake, if they have a stake in the gas sector, in the consumption of gas, in the production of gas, it just means that when that shift or that move finally happens, they are not left behind. And Nigeria as a country is not left behind. We can just, still continue to benefit, whether it's gas, whether it's fossil fuel.
All right, we can share that sentiment, the balance between the two.
So I think just like Saudi Arabia, which is heavily blessed with oil, is also using part of its savings from crude to actually diversify into other forms of energy, right? So that's what Nigeria needs to be doing, right? But if we look at the current situation, our sovereign wealth fund, what is the current state of things? We know that the excess crude account has been severely depleted. We need to start building fiscal buffers again and reinvest our savings into cleaner forms of energy. I think that they are complementary, and we don't need to do away with one for the other, right? Over the years, we think that fossil fuels will still remain king. This was even acknowledged by the king of renewable energy himself, Elon Musk, right? You are still going to see investments in fossil fuel, and we think that Nigeria has a lot to do to maximize its oil reserves, maximize its gas reserves, and reinvest those savings into cleaner forms of energy. I think over time it's going to be a better one for us. All
right. Just the time now, I have to probably split my next set of questions. Maybe, Felicia, I'll ask you about Treasury bills. Ibukun, I'll throw the exchange rate to you, see how I can manage the time. But the last auction we had, Felicia, I think the 364-day paper, this primary market was 23.5. I think the true yield was even higher than that. What's your outlook for the rate trajectory with where we are with the MPR and inflation?
Well, if you look at the CBN governor wanted to achieve like a transmission effect between what the MPR is and what rates in the fixed income market is. That was the posture when they started the hiking cycle in February, March. But we've seen that, after that, maybe July, September, we've not seen so much reaction from, the fixed income market to rates. We've seen reaction, but it has not been as effective as the reaction when we saw the first 600 basis point hike. And I would say going forward, especially with the fact that this hike was just 25 bips, I would say we don't expect to see significant reaction or impact on fixed income yields. There are a lot of other factors that could drive the direction of yields and rates for the fixed income. There's the fact that paper supply is one important thing that we need to consider. How much is the government in the market to actually borrow? Then what is liquidity conditions going to be like? Those other factors too would have more bearing. When you look at the rate of the pace of rate hike, just 25 bips, I think liquidity, paper supply would have more impact on the fixed income markets going forward than the 25 bips hike in rates that we've seen. But generally, I would say we expect that rates might actually stay around current levels. If the federal government is to maybe over allot, they've given an idea of what they are looking to raise from the fixed income market. But if we see the federal government allot more than intended, it might be something that could lead to maybe rates staying elevated. But if we see improved liquidity conditions and the federal government is not allotting more than they've intended to allot, or they are not allotting more than they intend to raise, or they are even allotting less, it could mean rates might maybe stay where it is or even trend downward a bit. So right now, I would say it's just up to other factors like liquidity and paper supply more than the impact of the MPR, the hike in MPR.
Fair enough, but people should still invest, right?
Of course, the fixed income is still the hotspot for investment in Nigeria currently. Yeah, I'll say that.
Okay, Ibukun, real quick, the exchange rates. I think as at yesterday, NAFEM, Autonomous Foreign Exchange Market, official rates, 1,675 or so. I was looking at the parallel market today. I was between 1,750 to 60, all right? 1,750 to about 1,760. How do you see things working out in the exchange, as far as the exchange rate is concerned, going forward?
So for the exchange rate, we think that we like what the CBN has said by emphasizing stability than a particular spot. And what that does is it removes speculation, right? Because the speculation that reserves are now at 40 billion, right. CBN will load a lot of money to defend, right? Since July, we've noticed that trend where the CBN prioritizes reserve accretion to defense, and that's actually good. And what is the result, right? Since October, we've received $1 billion per month, about $700 million net. What that means is that in Q4, we are likely to see more inflows than Q2 and Q3 combined, right? Mm-hmm. And it's going to be similar, even higher than what we saw in Q1. And we know the effect of what $3 billion inflows did for us in Q1, right? So if you have that sizable inflow into the reserves and of investors, foreign portfolio investors into your economy, it means that you're taking a bet on your economy. And since the CBN is emphasizing stability, that's actually positive for them, right? From all indicators, the Naira is undervalued. We had estimated that the fair value was around 1,000 in 2024 and it could be around 1,500 in 2025, which means that even at the current rate of 8,750, the Naira will still be undervalued. And at this particular stage, these are the stages where you will see investment inflows from investors that understand the dynamics, right? Although you see a lot of people trying to take safety in the dollars, but they know that this market, this is the cheapest ever you're going to buy the Naira, and it's essential to actually invest. So we'll see more of foreign portfolio investors. That's why we are seeing the CBN maintaining its hawkish stance, right? Because a high interest rate environment will attract foreign investment, will reduce the rate of depreciation in the Naira, and we are past Q3. Q3 is where I would say is the most volatile period for the Naira historically, right? And we now that we are 8,750, we could probably see some appreciations in Q1 if certain policies are put in place, right? We know that subsidy has been effectively removed with the recent adjustment in the PMS prices. If there is no significant depreciation in the Naira, we should actually begin to see increased inflows probably from the NMPC into the CBN, and we are monitoring that dynamics to see how does the removal of subsidy improve the foreign inflows into the reserves, and how does that impact the CBN's ability to actually ensure the market is well supplied. And those are factors we are looking into going into 2025. So we think that exchange rates could remain quite stable over the near term if there are no risks over the horizon.
We have unfortunately run out of time. I wanted to ask you about Donald Trump and the 2025, but maybe I'll bring you both back in the future individually to talk about that. Felicia Awolope with Meristem Securities, Ibukun Omoyeni, of course, with Ibukun, where you work again? You work with Vetiva Capital. Thank you so much. I keep wanting to mix things up. Thank you both for joining us. Really appreciate your time.